Hello and welcome. We are having this special interaction with a very fresh face on business television. Jitendra Gohil of Credit Suisse Wealth is here with us to talk about his new report, Urbanizing India. So we have thought of structuring this discussion around the new theme which he has been following for years now, and how investors can benefit from him, from understanding this mega theme which he is talking about. Jitendra, thank you very much for chatting with us and taking time out to talk about Urbanizing India, your latest note.
Thank you for having me here.
Jitendra, you've been looking at this theme unfold for a couple of years now, but now you're of the belief that it's gathering pace. When we say Urbanizing India, break it down for us. What are the sub themes which you have observed that you come about this mega theme called Urbanizing India?
See, if you look at India, currently around 33% of India's population, they live in urban areas. If you compare that with other countries, like on an average globally, around 55% of population lives in urban areas. But for India, the progress has been slightly slower. So in 1950s, if I say, India was around 20% urbanized, and now it's just 33% urbanized. But from here onward, we think that the trend in urbanization will accelerate. And why we believe is so is that because if you look at the kind of infrastructure investments that have gone through over the past 2-3 years, we'll try to accelerate this trend. So we can see in two ways, like either people move from villages to urban, or villages themselves upgrade their infrastructure akin to urban areas. So these are the two broad themes that we think that India is going to see over the next few years. So as per UN, United Nations, around 30%, 40% of Indian population will live in urban areas by 2030. So that trend we are actually observing, and the kind of evidence we are getting on the ground is hinting towards accelerating trend in this space. And we observe that there are certain companies who are well positioned to benefit out of this transformation from rural to urban.
So Jitendra, basically Urbanizing India can be broken down into one, of course, infrastructure, both rural and urban, and companies which are catering or working around it. The other thing which you also talk about in your note is the way consumption pattern and behavior of upwardly mobile population of our country, because income levels have improved, is also changing. Talk to us this second part which you have spoken about in your note.
Yeah, so see, it's a very natural trend, right? So if a person moves from village to urban areas, his consumption pattern changes, his thinking pattern changes, right? Even the investment pattern changes, right? So this we have seen in our analysis. So for example, we have compared India with some of the countries which are similar to India over the past few years, how they have urbanized. And we have bucketed them into 0 to 10%, 10 to 20, 20 to 30% urbanization rate. And what we have seen, whenever these countries have moved from 30% urbanization rate to 40% urbanization rate, they have seen significant jump in per capita income. Okay, so when per capita income goes up, your consumption ability goes up, right? And this trend is clearly visible. So first of all, we are seeing the food habits are changing, the kind of food you eat. Second, you will see the fitness centers are opening up. People have tendency to go out and eat. So restaurant business is booming in India. The movie exhibition industry is growing leaps and bounds now, and we are seeing good capex coming in that area as well. So premiumization trend is very much visible. I just give you one example. So if you look at the four-wheeler industry, right? So right now, if you see the premium vehicles, which is your vehicles which are like mostly utility vehicles or somewhere slightly higher category vehicles, and you see the entry-level vehicles, right? So 10 years ago, entry-level vehicles were bigger proportion, okay, and now almost like a 55% of four-wheeler market is actually premium, right, in terms of premium hatchbacks and UVs, right? And the growth rate, if I tell you, it's around 25% over the last 10 years, and for the entry level vehicles it is just 7%. So that trend we have seen. If you look at the air travel industry, right, who thought 3 to 5 years ago that India will be such a large domestic airline market, and now we transfer almost like a 265 million at air passenger traffic growth, and I think by 2020 it is expected that India will be the third largest domestic airline passenger
Jitendra,
market.
I know you want to talk about stocks, but let's talk about portfolio construction. Before, I will also talk to you about how you're constructing about a portfolio with these triggers in place for separate, sub themes. But give us a basket. What categories of stocks have you identified for your ultra HNI clients whom you cater to? When you are positioning this urbanizing India portfolio theme, roughly, if you could talk to us, what pockets to look for?
Okay. So see, if you ask me, our UHNI clients, if they have, if they want exposure to equity, they can directly invest in mutual funds, or they can go to PMS. But what we offer here is, if a investor wants to invest in a basket of stocks, a thematic idea, like which they don't want to hop in and out and hold on for a longer, let's say 3 to 5 years. So we actually create a basket of stocks around this theme, right? So as I mentioned, like infrastructure. So I'm very positive on road companies, for example, right? So when the roads are built, naturally the land prices goes up, and then the consumers living standard also goes up, right? Because they will be able to access newer markets for their goods, and they also have the avenues to earn extra income, right? For example, if you provide electricity, they can actually work for a couple of more hours at night, and they can actually improve their earning power. So those companies who are into electric space, like T&D companies that we like the most, road companies I already mentioned, and companies which cater to premium products, right, especially in the urban areas as well as in the rural areas, because the brand positioning matters a lot. So those companies we like. So there are certain companies which are actually spending heavily on innovating new products, the consumer products, and those companies have better growth than the normal consumer companies. Second, we also like consumer durable companies. Okay. So we think that the financial penetration will help to improve the penetration of this white goods, right? So we like consumer discretionary companies which are catering to the needs of consumers. So I think these are the two broad areas that we look at. And third is housing. Okay, so in housing we think that there are 4 ways to play. Either you buy directly a company which is a developer, which develops let's say low cost houses, and second, we like companies who are into mortgages, right? So it's a huge opportunity for India, because if you look at mortgage penetration in India as percentage of GDP is just 10%, and it is expected to be 12 to 14% in the next 5 odd years. And if you look at even the mortgage growth, the credit growth is expected to be more than the normal credit growth in the system. So we expect that the companies which are catering to low cost housing finance should do well. And lastly, we think that the house refurbishment companies like paints, tiles, faucets. So they have seen some kind of performance lag because of GST demon, but we think that it's a time now one should look at these companies again.
We observed that last 10 to 15 years, it's the housing finance companies which have actually become very large. The entire pocket has become quite well established now. The housing growth, whatever happened, got captured in this pocket better. But do you believe that home refurbishment and improvement companies, plywood companies, even cement companies or tile makers, they can also become those as large companies in the next 3-4 years? Because mostly this is the mid cap pocket right now.
Yeah, so we think that the growth of consumer durables, for example, could be around 13 odd %. Our expectation is. Similarly, it also depends on how the economy progresses, right? So if per capita income goes up, then we will see that double-digit growth will come up. And they also have a good operating leverage when it comes to, for example, the cement companies. If the demand is currently around 6 to 8%, if it goes to double digit, we will see good operating leverage coming in. So we think that uh, every decade you will see that the winners are, there are new winners. First it was IT, then we had seen pharma companies, but now we feel that companies catering to consumer demand, the retail finance companies probably, or companies which are catering to investment needs of individuals, right? So the financializations of savings that we talked about. So I think those companies also will do well, and obviously if they can grow around more than our nominal growth of GDP, I think after in the next 1 decade you will see that these companies really become big.
And talking of financialization, I'm curious to know from you, you've been doing it, you've been interacting with the Ultra HNI community for their investment needs for some time now, almost completing a decade. Are you observing changes in their own approach now? Maybe the younger ones were more keen towards higher allocation towards equity, lesser towards debt, and slightly older ones perhaps were averse to high risk equity. Do you think that allocation is also undergoing a change, and willingness to look for long term equity as a solution is also changing, or overall the way they look at financial assets is kind of opening up now?
Absolutely. So if I give you example, what we have written in our wealth report, which gets published every year. Last year, our wealth report came out. So individual wealth in India is around 5 trillion. Out of that, 85% is invested in real assets, which is land, your real estate, and then you have fixed deposit. So very little goes towards financial assets as of now. But this trend is changing, right? So after demon, we have seen huge money flowed into the banking sector, and now this money is actually channelizing into equity. So every month we are seeing close to 2 billion of inflows coming into mutual fund. Last month I think we saw 12,400 crores came into mutual funds. So that trend, we think it's a structural in nature. However, in the past it has happened whenever the market corrects, retail investor gets jittery and they withdraw. But this time we are saying this could be a structural change, because first of all, India does not have many other option to invest, right? So real estate was a major chunk where the money used to flow, but now I think almost the investor demand for real estate is pretty low. And we are also of the opinion that real estate prices are not going to go up significantly, but the volumes will go up. So prices might remain largely capped, but we think that the volumes should go up, and that's where we think most of the money will flow to equity away from real estate.
So do you think that the super cycle which real estate had seen over the last 25 years, in fact Ultra HNI in India and people of Indian origin settled abroad, the choice of investment was premium real estate in big towns. The needle is now moving towards equity and financial assets, you think, and this is a more structural change going forward?
See, it depends how our per capita income moves. Okay, so there will be always demand for a certain class of real estate. I'm not saying that the real estate volume will not go up. There will be always buying, but the kind of appreciation we have seen in real estate won't come back so soon, because there's inventory there. And I feel personally that like, let's talk about urbanization again, where I feel that there's a nuclear family concept coming in, and people prefer not to lock their money, right? They don't want to be asset heavy. Like if you look at India's millennial population, like 15 to let's say 35 years of age, we have one of the largest population in there, and the new generation do not want to lock in their money in real estate. Rather, they want to spend on travel, tourism. They want to spend on their activities that they like. So I think real estate as an asset class could see some kind of demand push, but not a pricing push. I don't think so. That's going to happen.
I'm curious, that point which you have made in your note about government also playing a role in spurring capital formation, and hence a variety of road building companies, cement of course, because a lot of bitumen, in place of bitumen now cement is being used. Talk to us about how government's role will be and in infrastructure creation, because of which what pockets of stocks actually may do very well in the next coming years?
So let me put it in one perspective. If you look at how government's spending pattern has changed, right? So earlier we used to see that subsidy, for example, used to account for around 17 odd percent. Now the burden has gone down to almost around 12 odd percent, right? So you have deregulation of diesel, direct benefit transfer, and also the revenue base of the government is going up. So earlier there's hardly anything left for investment in infrastructure, but now we are seeing that more money can flow into infrastructure. One, second, the execution, right? So earlier the execution was a big challenge. You had a lot of environmental issues, but now I feel that the execution has picked up materially. The way government is moving swiftly in terms of creating infrastructure, I think that's one policy decision that has played out well. And if you look at the other way, in terms of execution, just want to give you one example. Earlier, just to create 100 meters of road in a day, they used to take around 50 to 60 people, right? Now, if you import a machinery, you can lay tracks. Let's say in just one day, around 1.5 kilometers of track you can lay. So I think the execution has gone up because of the technology has changed, and I feel that government is making good progress on execution part. And second, which companies you think can benefit? So there are certain companies which directly benefits from government's order tendering, right? So there are companies which cater to low cost housing construction.
Let's talk about the leisure industry. As you were saying that now the propensity to consume and spend of a ordinary Indian is also going through a change. There are of course aviation stocks, then there are holiday makers which provide services, be it forex, be it the entire planning, and then there are also resort operators. So what is the growth you are seeing here? What kind of opportunity which lie for this leisure traveler?
Yeah, so if you put it in the urbanization concept, what we believe is that tourism is the sector that can create huge job opportunity in India, right? And people will not have to come out of their villages and come to urban areas if you create tourism options for them. And if you look at the Udan scheme, which is actually connecting some of the airports in the hinterlands, and some of the destination where the tourism can be flourished, I think that scheme has taken off, and I believe that that will lead to better options for the tourism kind of sector. And I believe that sector should do well, because Indians, generally we don't spend so much on leisure and travel, but that trend is visible looking at the airline growth numbers and the kind of per capita income growth that we are talking about. So we are positive on that.
The other thing I am curious to know about the factors which are impacting per capita income for our country, and also the pace at which it has grown over the last 2-3 decades. Do you think that pace itself is getting accelerated? So the next incremental $1,000 per capita income actually will come at lesser time compared to what we have seen in the past few decades.
See, if you look at our wealth report, right now we have the total wealth, the individual wealth is around 5 trillion, and we expect it to reach to around 7 trillion by 2022. So that is a growth of around 7.5–7% kind of a growth, but that is measured in dollar terms, right? So if you measure in rupee terms, the growth may be much higher, let's say 9–10%. So that kind of growth that we can assume that India's per capita income growth could be over the next few years.
So we've spoken about housing finance companies, we've spoken about road construction and EPC players, some of the travel holiday makers you indicated towards home improvement. This is I assume 40 to 50 company kind of a universe we are talking about. Are these multi-bagger kind of ideas, or you think that this kind of a portfolio is actually a compounding portfolio over the next 5–7 years? What is the nature of the returns this theme is potential over the next 5–7 years?
So we are positioning urbanization at least slightly high risk, high return kind of a portfolio, but there are companies which are in the large cap space can form part of this portfolios. So we sometimes have 60-40 in terms of large cap and mid cap. Sometimes we think that if the market is slightly more bullish, then we might go towards mid cap, right? So as I mentioned that, for example, consumer durable is growing at around 13 odd %, airline industry is growing around 17 odd %. So underlying trend itself is more than what nominal GDP growth of India. So you will see that these companies would be able to outperform as a portfolio. This portfolio should be able to outperform the market return in our view. So we are looking at some companies at around 20-25% CAGR growth. Because not just the top line, but they also do a lot of cost cutting measures. They are well run companies. So out of the universe of, let's say, 30-40 companies that we shortlist from our coverage universe, we pick a concentrated stocks of around 10 to 15 stocks and recommend to our clients that these are the stocks that one should look at slightly from a longer term perspective. Yes.
And lastly, I would like to understand from you, when you interact with these companies, what sense are you getting? Because these are some of the companies have been around for decades and they've achieved this size after a very long haul, riding through the cycles. How are they preparing for years ahead? Are they fully utilized on the capacities right now? Are they preparing for high growth? Just for example purposes, if you could talk about, say, 2-3 industries or some companies you have met, some feedback from the management.
Yeah, so the capex cycle was a little bit lagging in India, but now I think if you look at the consumer side of the capex, right? For example, the auto companies have been spending, and in fact, some of the auto companies are actually running out of capacities, right? So that they are actually expanding capacity to meet this growing needs. Consumer durables companies, largely they import from China, but now they are setting up new plants in India. Because made in China versus made in India, right? So you get slightly more premium. So they are setting up their manufacturing base in India as well. So we are seeing that most of the companies are actually willing to spend to tap this growth potentials. As I already mentioned about the multiplex industry, that is also showing growth. Just to give you example, the Hollywood collection is around 800 crores last year. And Bollywood could be around 2,300 crores. So we are not far. So even the movie exhibition industry is saying good growth opportunities for even Hollywood movies. So the acceptance levels has gone up, and I believe that the acceptance for premium products, even at a higher price, would be accepted. So companies are well prepared and they understand this trend and they are investing.
All right, Jeet, thank you very much for your time today. It was wonderful chatting with you, and look forward to chatting with you in your future thematic reports as well.
Thank you. Thank you, Ajay. Thanks.